Well, local bonds continue to benefit from the global risk on trade. The latest bit of economic data, of course, that provided encouragement were those buoyant U.S. non-farm payroll numbers on Friday, which saw 287,000 jobs being added. And that saw net foreign purchases of domestic bonds extend a further week, with year-to-date purchases now exceeding 50 billion rand. We're joined on the line this afternoon by Rhandzo Mukansi from Futuregrowth Asset Management for more on what's playing out in that space. Rhandzo, thanks so much for your time today. So despite a stronger rand, bonds trading softer today, and it's really that global trend pushing the markets lower, isn't it?
That's really true. I think we've seen the domestic market driven a lot by global influences and the global risk appetite, and today was no different. We've seen global yields kick up a bit, and the local market just followed that move up on the day.
Yeah. Does it make you nervous, the kind of flows that we're seeing on the bond market scene right now, despite local fundamentals? Because one assumes that any flick or turnaround in global market sentiment will see a quick unwind of what has been filtering through, where, of course, we've already seen flows into emerging markets hitting record highs.
That's right. It's been extraordinary, actually. The past week, we saw about $3.2 billion of flows. In the week alone, that was a record high, and that money, of course, has washed onto our local shores. And we've seen, as you said, 50 billion rand of flows in all year to date. So it's been extraordinary, and that's been despite weak local fundamentals. In terms of the sovereign view, not much has changed. So we do worry about global appetite reining in and then having a negative effect on our local market.
Yeah. When it comes to activity at today's bond auction, talk us through all that played out and, the distinction to be made between a local investor appetite and foreign investor appetite at this stage.
So the market was quite strong. We had three bonds on issue, and they all cleared below market at around 3 basis points. But the covers are positive as well. So I think what we have seen the past week, as you've alluded to, is that foreign participants have brought a lot of money onshore, and the feeling I get from the market is that locals haven't participated as strongly as foreigners have. So I think it's just...
Yeah. What we read, Rhandzo, from low bond yields globally is investors expecting economic growth to remain tepid, or a sign that they expect central banks to react with renewed monetary policy, stimulus rather. Of course, we've got the BOE being expected to lower its lending rate on Thursday, and the Bank of Japan expected to ease monetary policy further as well. What are you anticipating on those fronts?
Markets are anticipating, I think, more liquidity being pumped into the markets. Not more than 6 months ago, there was talk of the BOE maybe hiking rates, and that sentiment has completely shifted post the Brexit discussion. So I think market is anticipating greater liquidity, and I think that's why we have seen an extension of the search for yield, for which South Africa has been a beneficiary in the past month.
Yeah. What that has been supportive to an extent of is the rand. Are you surprised at the kind of gains that have filtered through today?
The rand has been quite strong on the trade-weighted basis. The rand has really done well in the past month. It's gained 8% on a trade-weighted basis, so it hasn't only benefited relative to the dollar. And again, it's a global story. Nothing domestically has changed in the past couple of weeks. I think that also transpires through into credit default swap spread, which we see at 250 basis points. And again, sovereign risk has almost been priced out relative to where we were at the beginning of this year, closer to 400 basis points.
So, Rhandzo, your outlook for the local bond market scene for the week ahead, more of the same?
I think more of the same, but that has been supported by positive local data in the past couple of weeks. So, positive trade data we saw 2 weeks ago. We saw strong manufacturing production data out today, and that will help give markets a little bit of confidence. I think it will support the rally we've seen month to date.
Well, let's leave it there, Rhandzo. Thanks so much for having joined us on the line this evening. Rhandzo Mukansi is with Futuregrowth Asset Management.